Good morning, everyone. From the chapter 8, National Income Accounting, we will be discussing the topics, and today is methods of measurement of national income. See, there are three methods of measuring the national income. They are number 1, income method, number 2, expenditure method, number 3, product method. There are three methods of calculating or measuring the national income. See, now in order to study this income method, expenditure, product method, let us discuss few things which we discussed in the earlier videos. So in the previous class we discussed about the circular flow of income, right? That means the income is flowing from one sector to the another sector. This in detail we discussed in yesterday's video. So in the discussion of the circular flow of income, we have pointed out that national income can be measured at 3 points. Okay, so before going to that, let me just go through once about the circular flow of income. See, the first, this arrow, it is the household is spending, that is expenditure. It is spending the money for what? Means to get the goods and services. Then the firm is supplying the goods and services to the household. Next, the household is giving its factor services like land, labor, capital, organization. In return, the firm gives the payment to the household. For the land, it gives the rent. For the labor, wages. For the capital, interest. For the organization, profits. So these are the factor payments. Now I think it is clear. The household is spending to the firms. That spending we call it as a expenditure, and in return the firm gives to the household the goods and services. Now the household is giving its factor services like land, labor, capital, organization. In return, the firm is giving for the land, rent, for the labor, wages, for the capital, interest, for the organization, profit. Okay, so the income is flowing from one sector to the other sector. The firm is giving rent, wage, interest and profit to the household. That money the household is spending to the firm to get the goods and services. That spending, the household is spending the money. So the income from the household, it is flowed to the firm. From the firm, it is flowed to the household. This is about the circular flow of income. In the previous discussion we have pointed out. Now here, how it is relating with measuring the national income. See, I'll mention the 3 points. I want everyone to listen carefully. Here at this point I'll mention as A. At here I'll mention this point as B. At this point I'll mention this as C. There are 3 points, A, B and C. So here the household is spending the money to the firm. It is called as expenditure method. At point A, what is the household spending to the firm? Adding up the income means the household spending, that expenditure, it is in a money terms, right? For example, I am buying one bag. So I am a household. From where? From the firm. That bag, how much cost? It cost 1000 rupees. So that is expenditure, spending. Like that, the whole nation spending to get the goods and services from the firm. The total expenditure, when it is calculated, we call that as a expenditure method, right? Number, I told you already, this is point A, this is point B, this is point C. Okay, so at point A we call it as expenditure method. Now the household is giving to the households the goods and services. For the goods and services, it has a price, right? So at point B, if you calculate all the product values, that is in the introduction class we have discussed about the consumption goods, produces goods, capital goods, intermediate goods, final goods. That final goods values considered, that final goods value considered in the GDP. At point B, if you calculate what are the goods produced in a country in a year, that all goods value it is considered, it is said to be a product method. When we calculate all the expenditure of the household, we call it as a expenditure method. When we consider all the goods produced in the country, the final goods value, we call it as a product method. At point C, when we add up all the factor income paid to the household, when we calculate all the income together, where all the people who are getting the rent or a wages or a interest or a capital, that is all the income which is received by the household. That factor payments when we add, will get the income method. So here at point A, we call it as expenditure method. At point B, we call it as a product method. At point C, we call it as a income method. So that there are three methods to measure the national income. So today I will concentrate only on the income method. Okay, that means adding up, measuring the sum total of all the factor payments. Measuring the sum total means my household, your household, every people's household, adding up all that sum total of all factor payments will be called as income method. Okay, now we will study about this income method. See, this method approaches the national income from the distribution side. As we all know that land, labor, capital, organization, these are the factors of production. The rewards paid for these factors are land, rent, labor gets wages, capital gets interest, and organization receives the profit. Right? These are the factors of production and the rewards for the factors of production. Okay, that means the national income is distributed in the form of a rent, in the form of wages, in the form of interest, in the form of a profit. So it studies from the distribution side. Right? In the study of circular flow of income, we have mentioned that the sum total of the expenditure in an economy must be equal to the total incomes received by all the factors of production taken together. Household will be supplying the factors of production. They receive the income in the form of wages, rent, interest and the profit. So under this income method, national income is obtained by adding up the income received by all the individuals of a country. Okay, so what are the production takes place in the country, that total expenditure, and it will be equal to the total income received by all the factors. As I told you, wages, rent, interest and profit. These are the income of every individual. Whoever gives out their labor, they will be getting the wages. Whoever rent their lands, they will be getting the rent. Whoever gives the loan, they will be getting the interest. And whoever take the risk of organizational initiation of any business, they will be getting the profit. These are the incomes of every individual. In our homes, some people will be working in a private sector or a public sector. Some will be giving out their land, some will be investing in the business. Okay, and that income, all that income obtained by every individual, when we total up all that, we will be calculating the income method. So under this income method, national income is obtained by adding up the income received by all the individuals of the country. Now here is an example. Let us imagine firm X. So firm X is here the one example is given, particulars, wages and profits. We are adding up this both. Okay. So firm X from rupees 50 received gives rupees 30 as a wages. Okay. See, this firm X is getting 50. It receives the income of 50 and gives 30 as a wage, 30 as a wages, and keep the remaining 20 as a profit. Totally firm X is, totally for some product it got rupees of 50. In that it pays the wages of 50 and it keeps 20 as a profit. Similarly firm Y, okay, it gets the total income of 150, total it receives 150. In that 150 it pays the wages of 100 and it keeps 50 as a profit. Is it clear? So in this table it is clearly mentioned. I said firm X is getting total of 50. In the 30 it gives as a wages and 20 as a profit. Firm Y gets total money received is 150, 100 rupees as a wages, 50 rupees as a profit. I am not telling 100 rupees, 50 rupees, just an example for understanding, right? And here now how the income method is added. Here it is given, when the wages of firm X and firm Y, when it is added, like that many firms are there in India. This macroeconomics means studying as a whole. How many industries, how many firms are there in India, taking into consideration of all the wages received by the firm. Every firm, every household, individuals, how much the wages they are getting from firm X, from firm Y, from firm Z, okay, A, B, C, many firms, how many firms are getting their wages, all that wages are added up. Here example we have taken only two firms, firm X and Y. So 30 plus 100 is 130. And the profits. So profit received by firm X is 20 and firm Y is 50. So 20 plus 50, 70. Like this, how many firms are existing, how many individuals are getting the income, the national income, that all when we total up the income of every individual, we will be getting the income method. So we call the sum total of all individuals' income. Okay, we call it as a national income. It is the one way of measuring the national income, right? So here how to calculate, for example, thus GDP equals wages plus profits. Okay, so wages plus profit. So how much the wages received by all the firms? 130. How much the profits received? 70. So 130 plus 70, that is 200. So what is the total GDP? GDP is 200. That is, national income is calculated. How? By taking up the individual's income of the country. When we add up all the individual's income of the country, we will be calculating the national income. This is the one method of calculating the national income. This is called as income method. So in the next class we will be discussing about the remaining two methods, that is product method and the expenditure method. Thank you for watching.